We added a new feature to the retirement budget calculator to try to help you estimate your state income tax responsibility as you transition through retirement. Now, let me tell you, state income taxes are complicated. There's all kinds of moving parts. Different states have different deductions, different credits, different type of income gets taxed. Some states tax Social Security, some don't. Some tax retirement portfolio withdrawals, some don't. So we're not trying to actually do the state tax calculations, but let me show you how you can help estimate this in the retirement budget calculator. So what you're going to do is you're going to come over to the taxes section and you're going to scroll down until you see state results. And you'll notice now you can select the state where you live. And so in this example, we're saying we live in Washington State. Washington State has no state income tax. We come to the retirement optimizer and you can see our estimated taxes are based only on federal income tax rates. So now let's say that instead of living in the state of Washington, we're going to say we live in the state of California. When you do this, it's going to change this percentage to 4.9%, which is the average effective tax rate for all Californians. Now, this may not be accurate for your specific situation. Maybe you're a high income earner and you pay a lot more. So for your situation, you might want to come in here and change this percentage to 10%. So now we would say that the tax rate for your state is 10%. What it's doing is it's taking 10% of the adjusted gross income, $137,534. So it's saying $13,753 of tax. So you come back over to the retirement optimizer and now you see this estimated tax now includes your federal and your state. One other thing that I want to bring to your attention is, let's say that you currently live in Washington State, and so your state income tax rate is 0. But let's say in 5 years from now, in the year 2030, you're going to move to California. And so now we want to change this to California. And we're going to say that your state tax rate is 7% instead of the default. We come down here to the retirement optimizer. So you can see for the next 5 years, you're paying no state income taxes. But then when you move to California, it's going to say in the year 2030, it's going to jump back up. And then let's say one more thing. So in 2035, we're going to say you move back to the state of Washington. So we come back over here to the state or the tax section. We go to the year 2035, and now we're going to move and make this Washington State again. And so it drops back down to 0% in the year 2035. So whenever you make a change to the future, that change is going to persist every year until you change it again. So as you can see now, we see no taxes up till 2030, then California state income tax estimates through 2035, and then we have you moving back to Washington State in 2035, and the tax rate drops back down, and it's assumed that there's no state income taxes every year going forward. So that's how we're estimating state income taxes. One other thing I'll show you here, under the tax withholdings, if you enter state income taxes as a tax withholding, that is going to show up here as state income tax withheld. It's going to compare it to whatever the percentage is that you've selected. And then it's going to either show the amount that you owe or the amount of a refund that you're receiving. If you're receiving a refund, we don't count that income anywhere. It's just assumed that that income gets spent and it's not being added back into income anywhere over here on the retirement optimizer. Anyways, that's a simplified way for you to try to estimate your state income taxes every year as you're transitioning through retirement. The calculator is not actually calculating state income taxes. It's just giving you a percentage to work from so that you can try to get a feel for what your state income taxes might be over time. Okay, I hope you found this helpful. Thanks so much.